Hey, this is Brian from Green Springs Capital. Today I want to talk a little bit about interest rates. If you follow the news, there's a lot of talk about interest rates. Interest rates obviously have risen in the last 18 to 24 months. Here at Green Springs, I just wanted to kind of talk about our philosophy on the current market with interest rates and what we do to mitigate the risk. So number one, we've always had a long-term investing strategy. So we're looking at returns over the course of the next 10, 15, 20 years. We're investing long-term. We are buy and hold. We plan to keep the properties that we're buying for the foreseeable future and have no exit plan or no need to have to sell these properties in 3 to 5 years. Because of that, we always fix our interest rate. 24 months from now or ago, we might have fixed it at 4.5%, 5%. Today, we might have to fix it at 6.5% to 7.5%. But we're comfortable with that because we're factoring that in on our assessment of the property. And we know that if the deal pencils out today at a rate of 7.5% and we lock that rate in, then we're going to be good 5, 10, 15 years from now. Now, if interest rates decline in the future and say they come back into 5.5% 5 years from now, we always have the option to refinance and again, lock in a fixed rate. So we're not taking on that additional risk profile that variable rate interest rates can provide. On the opposite spectrum, there's a lot of operators now that are getting themselves in trouble or have gotten themselves in trouble because in 20 and 21, they were taking on variable rate bridge loans. And over that course of that 24 months, those rates have doubled. And now they have problems meeting their bank covenants because their cash flow is not high enough to cover all of their operating expenses and their mortgage. This is putting them in a negative situation where they are forced to either sell at a loss or bring on additional capital to right-size the deal. Our philosophy is and always has been fix the interest rate going into the deal, and then you kind of avoid these risk profiles as the project progresses through time. The one exception I'll say to this is on the front end, sometimes when we take on construction loans, we do take on variable rate debt for a year to 18 months, even sometimes 24 months. And that's mostly because the banks, the lenders, local banks that we're working with require it on a floating construction loan. But when we go in, we always have the note convert ahead of time to a fixed rate sometime in the future when the project is stabilized. So what that means is we might go in today with a variable rate for the next 12 months, say, that starts at 7%. But we know that in 12 months when our construction project is finished, that note automatically converts with that same lender. So we don't have to go out and source new debt. It might reset at that point at 6.5%. So we know that 12 months from now, our rate is going to be 6.5%, and that is fixed for the next 5 to 7 to 10 years thereafter. So again, it avoids the risk of interest rates skyrocketing. It does give us a little bit of variable and volatility risk to the risk profile in the first 12 months. It's kind of just the nature of construction. But again, long-term perspective, if you avoid the mentality where you need to flip a property in 2 to 3 years, if you avoid the thought process that's more financial engineering than it is actual real estate investing, where you're going to manipulate the rates and we're going to, roll the dice on the variable rate because it's cheaper and there's no prepayment penalty. Those things sound great in practice until rates actually increase. And then you put yourself and your investors into a bad spot where the deal doesn't make any sense and you're doing capital calls or you're selling at a loss. So the lesson for today is, our philosophy here and our advice to you as other real estate investors is to take on fixed rate interest rates and try to avoid variable rates whenever possible, unless it's part of your business plan. So that's all I have here for today. You can reach out to us here on Instagram at Green Springs Capital. You can send me an email directly if you're interested in partnering with Green Springs as an investor. Just want to talk real estate. That's Brian at greenspringscapitalgroup.com. And thank you for your time and have a great weekend.